This is another Money Moves episode, so let's go ahead and dive into these articles to see where the millions and billions of dollars and euros have been flowing in the world of technology. Y Combinator's police surveillance darling Flock Safety raises $275 million at a $7.5 billion valuation. Flock Safety and one of its longtime VCs, Bedrock Capital, announced that the startup raised a fresh $275 million. Flock makes computer vision enabled video surveillance technology used by law enforcement as well as businesses, property management companies, and so on. It's best known for its automatic license plate recognition tech, but Flock also makes gunshot detection tech marketed to schools and recently acquired public safety drone company Aerodrome. The Atlanta-based startup has now raised $950 million in total funding according to PitchBook data, and its last valuation a year ago was $4.8 billion. Return investors Andreessen Horowitz, Green Oaks, Meritech Capital, Matrix Partners, and Y Combinator participated in this round. Given that it makes surveillance tech, Flock has unsurprisingly had its share of controversies. For instance, the ACLU cited concerns with Flock over the kind of mass surveillance it enables, and a year ago urged the company to allow independent review of its products. Privacy advocates in Norfolk, Virginia are currently suing to stop Flock from being deployed there. YC's Gary Tan took to LinkedIn to applaud the success rate Flock claims it has achieved in fighting crime. But it's Flock's revenue growth in addition to its public safety products that's caused investors to continue to double and triple down on Flock, Beelan said. Dexterity picks up $95 million in funding for container unloading robots. More robots powered by artificial intelligence could soon be unloading trucks. Dexterity Inc. has closed a $95 million funding round, bringing its total valuation to $1.65 billion. Dexterity said it uses physical AI to give its full-stack systems human-like dexterity, freeing workers in logistics, warehousing, and supply chain operations from repetitive and strenuous tasks. Dexterity has developed DexR, a dual-arm system for unloading boxes from trailers and containers at the loading dock. The robot uses machine vision for sensing and integrated motion planning to pick up a range of items from stiff cardboard to soft plastic. DexR uses industrial robot arms with a 60-kilogram payload, a reach of more than 16.4 feet, and the ability to operate between 32 degrees to 122 degrees Fahrenheit. The mobile system also uses machine learning to get better at packing trailers over time, according to the company. Its stated goal is to have one pilot manage 10 or more machines. Lightspeed and Sumitomo Corp led Dexterity's latest funding round. This venture round followed a $140 million Series B investment in October of 2021 and a $56 million Series A in July 2020 for a total of $291 million to date. Sumitomo, a Japan-based multinational trading and business investment company, is a customer of Dexterity. It signed a 2022 contract to deploy 1,500 robots to Japanese warehouses by 2026. Virtual physical therapist Hinge Health files for IPO, estimated to raise $500 million. Hinge Health, a 10-year-old company that offers a digital solution to treat chronic musculoskeletal (MSK) conditions, vowed to go public. Although Hinge has not announced how many shares nor priced them, the IPO specialists at Renaissance Capital estimate the company hopes to raise up to $500 million in its offering. Hinge's revenue in 2024 was $390 million, a 33% increase from the prior year, while net losses narrowed to $11.9 million from $108 million in 2023. The company's technology aims to reduce MSK pain through the use of advanced wearable sensors and computer vision technology that is monitored remotely by a clinical care team of physical therapists, physicians, and board-certified health coaches. The company's largest outside shareholders are Insight Partners, which holds 19% of all stock, and Atomico, which has 15% of all shares. Other venture capital firms that own approximately 8% of Hinge's shares include 11.2 Capital, Co2, Tiger Global, and Bessemer Venture Partners, according to a filing. In our next Money Moves news we have, Solar emerges from stealth with $30 million to build build the Stripe for security. Sola has built a low no-code platform to let users design their own cybersecurity apps tailored to their specific needs, including tools to manage apps they might already be using. Sola has emerged from stealth with seed funding of $30 million to hit the ground running with a stated aim to democratize how security can be approached and handled. S Capital and former longtime Sequoia VC Mike Morowitz are co-leading the round, with S32, Gilead Capital Partners, and unnamed angel investors participating. Sola's interface lets users set goals or ask questions in natural language, then pull in data from different sources and identify what it is aiming to track to create a new app that works with the company's specific assets. Sola can be used to query data within existing security apps that are being used, but it also has security tooling built into it to replace certain functionality. Sola has ready-made apps as well as for those who do not want to put together apps of their own. The aim is to create more streamlined security services for organizations that in theory will do exactly what they want and for a fraction of the price. Gecko Robotics Inc.'s $100 million agreement to help modernize its power plants. Gecko Robotics and independent energy provider Naze Corp entered into a $100 million strategic partnership under which Gecko's AI-powered technology will help Naze maintain and improve its power infrastructure. The multi-year partnership, which can be expanded beyond $250 million, comes as U.S. energy demand, driven by increases in AI, data center development, electrification, and electric vehicle adoption, is set to skyrocket over the next 5 to 10 years, the partner said. Under the agreement, Naze, which claims to operate the second largest fleet of power generation assets in the United States and have a 65 gigawatt under management, will increase its facilities' use of advanced technology to boost reliability and operational efficiency. Gecko's wall-climbing robots, drones, robot dogs, and fixed sensors will be deployed across Naze power plants, where they will collect data that will be fed into Gecko's AI-powered software platform, Cantilever. The partnership is also intended to help Naze attract talent that might otherwise go to work in the tech sector. Currently, for approximately every 4 power industry workers who retire, only 1 is hired. By outfitting its plants with Gecko's cutting-edge robotics and AI technologies, the partners are aiming to make the power industry more attractive to top tech talent. Celestia AI raises $250 million to transform AI infrastructure. Celestial AI, the company behind Photonic Fabric Optical Interconnect Platform, has raised $250 million in Series C1 funding. The round was led by Fidelity Management and Research Company, with participation from notable investors including BlackRock, Maverick Silicon, Tiger Global Management, and Lip Bhutan. Existing investors such as AMD Ventures, Coach Disruptive Technologies, Temasek, and Porsche Automobile Holding SC also contributed. This latest round brings Celestial AI's total funding to over $515 million, underscoring strong investor confidence in its mission to redefine AI infrastructure with optical networking solutions. Celestial AI plans to use the new funding to scale its Photonic Fabric platform, which enables seamless networking across AI compute environments. The company is focused on refining connectivity, switching, and packaging solutions to enhance AI processing efficiency. Additionally, the funding will support expanding its volume manufacturing supply chain to meet growing customer demand. With deep collaborations with hyperscalers, AI processor makers, and silicone packaging firms, Celestial AI is positioned to drive broader adoption of optical AI networking solutions. With backing from top-tier investors, Celestial AI has steadily expanded its market's presence. In our next Money Moves news, we have Skimplify raises $40 million to help manufacturers access specialty chemicals. Skimplify, an Indian startup that helps pharmaceutical and agriculture companies access a range of specialty chemicals, has raised $40 million in a new funding round co-led by Excel and Bertelsmann India Investments to widen its footprint in the U.S. and reach new markets. The Series B round pegs Skimplify's valuation at about $150 million post-money. Skimplify aims to connect manufacturers with specialty chemical makers using its platform, Atoms, which lists specialty chemicals from more than 5,000 factories run by over 200 manufacturers across 10 countries, including India, China, Vietnam, Egypt, and Japan. The startup primarily targets pharmaceuticals, agriculture, and industries. The startup vets manufacturers, gets them audited by third third parties semi-annually and segregates them based on their geography, chemistry, capacity, and compliance. It also process engineers existing chemicals to make them cost-effective and relevant for different use cases. Skimplify has served more than 600 customers across more than 16 countries worldwide. The startup plans to use the fresh cash to scale its presence geographically, cater to new industry segments, and enhance R&D. Skimplify has subsidiaries in Dubai and Indonesia and is looking to set up offices in the US and Japan. The Series B also saw participation from UMI and existing investors BNext, Omnivore, and 314 Capital. Startup studio Hexa acquires majority stake in Vivart, a vertical SaaS platform for museums. Hexa is trying something new. Instead of fostering startups from the ground up and incubating them for the first year or so, the Paris-based startup studio is acquiring a majority stake in Vivart, a vertical software-as-a-service company for museums that provides solutions for ticketing, fundraising, CRM, and collection management. The product has been designed as an all-in-one platform for museums built on top of Salesforce. Museums that use Vivart can create and manage events, sell tickets online and on-site, manage memberships, automate communications to donors, and integrate with the museum shop. Many museums use multiple tools for all their tasks. Having a single platform makes it easier to manage and maintain over time. With this investment, Hexa acts as a sort of hands-on private equity partner. The startup studio is investing 5 million euros to become the main shareholder in Vivart. Infinite Uptime backs $35 million to help factories optimize equipment usage. Infinite Uptime, an Indian startup that offers predictive maintenance solutions for factories, has raised $35 million in a Series C funding round to expand its footprint in the US and other markets. The company says it provides predictive maintenance and repair recommendations using proprietary sensors, software analytics, and AI-based diagnostics. It also has a smart dashboard that provides live monitoring capabilities. Infinite Uptime targets manufacturers in the steel, cement, metals, mining, fertilizers, chemicals, and paper industries. It also partners with OEMs to plug its AI layer into the new products. Cumulatively, Infinite Uptime says its solutions have helped customers see downtime savings of 74,274 hours, as well as 5 to 10% improvement in productivity, energy efficiency, safety, and compliance. The startup currently serves 800 plants in nearly 30 countries, and with the new funding, it aims to expand its presence in the US further. The Series C was led by Avatar Ventures and saw participation from Stepstone Group and LGVP, along with existing investors Tiger Global and GSR Ventures. The company is also looking to put the fresh cash towards product development and intends to evaluate M&A opportunities to scale further. Moving right along to more Money Moves news. ServiceNow to buy MoveWorks for $2.85 billion to grow its AI portfolio. ServiceNow recently announced that it has agreed to acquire MoveWorks, which develops enterprise-focused automation and AI tools. ServiceNow will pay $2.85 billion for MoveWorks in a mix of cash and stock. With the acquisition of MoveWorks, ServiceNow will take another giant leap forward in agentic AI-powered business transformation. MoveWorks' talented team and elegant AI-first experience, combined with ServiceNow's powerful AI-driven workflow automation, will supercharge enterprise-wide AI adoption and deliver game-changing outcomes for employees and their customers. Mountain View-based MoveWorks came into stealth in 2019 with an application to help enterprise customers automate high-level IT support. Over the years, the startup expanded its product portfolio to address various lines of business, including HR, finance, and facilities management. The company's clients include Unilever, Instacart, Siemens, and Toyota per its website. ServiceNow claims its newest AI solutions are the fastest growing in its history. The company said it had nearly 1,000 AI customers as of December 2024 and around $200 million in annual contract value for its Pro Plus AI tier. Rocket companies to acquire Redfin for $1.75 billion. Redfin is being acquired in an all-stock transaction that values the real estate listing platform at $1.75 billion. The acquiring company is Rocket Companies, a Detroit, Michigan-based finance and real estate holding firm that owns various brands, including Rocket Mortgage, Rocket Money, and Rocket Loans. The combined entity will essentially pull the two companies' respective strengths in home search services and financing. Rocket Companies, for its part, went public in 2020 and today has a market cap of $31 billion. The company's proposed bid of $12.50 per share represents a 63% premium over Redfin's volume-weighted average price for the month leading up to March 7, 2025. The offer entails exchanging 0.7926 shares of Rocket Companies Class A stock for each share of Redfin common stock, with Rocket Company shareholders owning 95% of the new combined entity and Redfin shareholders owning 5%. Pantera nabbed $60 million at a $1 billion plus valuation to build simulated network attacks to train security teams. Pantera, which has built a system that launches simulations of network attacks to stress test software and human response, has announced $60 million in funding and a Series D that values the Boston-based, Tel Aviv-founded startup at over $1 billion. The funding will be used for merger and acquisitions and to continue developing its product, the CEO said in an interview. Pantera is a play on the term pen testing, which is short for penetration testing, programs that have been devised to help drill security teams on potential attack techniques. This is effectively what Pantera has built to an elaborate degree in a product that is officially described as automated security validation. The round is coming on the heels of Pantera growing customers by 200% to 1,100 organizations and ARR by 300% in the last 4 years. Evolution Equity Partners is leading the round with Farrell Capital participating. So that's just some of the money moves happening in the world of technology. I hope you enjoyed the video. As always, continue to stay informed by liking this video, subscribing, check out these two videos right here. Let me know what you think down in the comment sections of those videos and stay tuned for the next TYSK report.